Hi everyone, and welcome to this morning's webinar session. Thank you so much for taking the time to come and join myself and my husband David, who is sitting behind me. Obviously this morning we're going to be looking at the forex market, but also at what's been going on in all the related markets, because those of you who are our students or who have read some of my books that are on Amazon will know that to really succeed as a forex trader, you not only have to look at the charts and obviously the price action and the volume, but you really need to know what's going on in the broader markets, because it will give you some insight into where the individual currencies may or may not be going. But as usual, before we start, can I draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. We're going to go straight over and see what is happening, as I said, in the broader markets. We've had some important data for the UK, which has had an impact, obviously, on the British pound. If you've got any questions on anything we say, please just type them into the chat box and we'll either answer it there or we'll answer it on air, whichever is more appropriate, as it were. Right, so very quickly, let me just take this away. Let me see what I'm doing here. Yep. Let's reduce that down. Let's put some charts up. There we are. And in fact, this is the cable at the moment. It's had the reaction to, as I said, there's been a raft of data from the UK this morning, including GDP, trade balance, etc. The numbers are all in. They come in at 7 o'clock now. They never used to, which was never used to about 9:30, wasn't it, before? Yeah. Everything seems to be at 7 o'clock for the UK. So if you do trade the British pound or British pound pairs, not just cable, then obviously it's something to be aware of. Make sure you get the time of the data correct. I can assure you it does happen. We either forget or we get the time wrong, or the economic calendar is set to the wrong time zone. Trust me, anything is possible and has happened. As you all know, I have at least 3 calendars on the go. This is from Financial Juice. I have to say, with Financial Juice, it's in case you haven't sort of picked it out, what the guys have done there. This is my news, and obviously everything scrolls through, but you can actually highlight the different markets and sort of toggle, as bonds, commodities, there's crypto news, there's indices, there's macro. I think Annie May's done a fantastic job with this calendar, and it just helps to filter out and highlight, as I said, the different aspects of the market, and it helps you to save all that data coming through. One of the issues with trading and not just forex is we are just inundated with news and data, and trying to get your head around it can be, it's something that does take time, and actually knowing what to focus on. I mean, obviously the economic calendars do help. They sort of traffic light the releases themselves and their likely impact. So that's a Financial Juice. I actually pay for it. You don't have to. There is a free version. The free version is slightly delayed, but if you haven't checked it out, then please do so now. We'll just quickly go over to forex. It doesn't mean that we forget Forex Factory. As you see, it's a different layout, and the thing to notice today is obviously there's a bank holiday, there's a national holiday in both Canada and the US. It's Veterans Day. It's also the 11th of November. Armistice Day is so it's in France. I think it's not sure it's in Italy as well. What that means for the markets is forex just continues. I believe, though you have to check for this afternoon, the stock market will be open, but the bond market isn't, and that's probably not such a bad thing given what's been going on in the bond market recently, following yesterday's CPI and the general panic that is now going on around inflation. And those of you who've been coming regularly will know that David and I have been talking about inflation since June, And lo and behold, we're now coming up to the end of the year, and the central bank seem to have woken up to the fact that it isn't necessarily transitory. It may prove to be so, because the numbers that came in are, they're setting records in the sense that, this is the worst since for 30 years, blah, 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 blah. So you could actually take the opposite view and say, well, maybe it has actually peaked, because a lot of it is to do with energy costs, the cost of fuel, and obviously the oil price, and the problems that have been in the supply chain caused by the virus and the pandemic. So these things are by their very nature, they could be transitory. So we will have to see. The last economic calendar is trading economics. Again, it's a very, very comprehensive calendar. You can filter it, as I said, and I do like to sort of go between the three. But most of us start with Forex Factory. It's a great little calendar. And the other reason I like it, I like Forex Factory, is with fundamental news, you can read it like a chart, and this is what they put up, and it gives you context of what you're looking at, because with the market, when you have a piece of news and a release, you always get a knee-jerk reaction. And then when the market sort of says, oh, well, it takes a breather, and it goes back and looks at it, and it's the context that counts. This is what's the most important. And let me see if I can find one that's, let's have a look, manufacturing production, as it were. It's, did very well last year. It's kind of flatlined, gone down. It's kind of going nowhere. It gives you a better sense of how this release may or may not impact the currency going forward. It's something we explain in the Forex program. David can explain it in detail as well. But and Forex Factory allows you to do this. This is the trade balance, etc. But you have these really, really nice little charts that you can just toggle on and off. Right, what's happening now? A quick look round on investing.com. Well, the headlines, as always, media headlines are always, inevitably behind the curve of what is happening at the live edge of the market. And after yesterday and the CPI and the PPI earlier on in the US, as I said, the numbers came in much worse than expected. We had the inevitable sell-off. But this morning, things are, they're kind of, markets are trying to stay positive. And as we said in yesterday's webinar, or yesterday evenings, when we looked at the stock market and commodities, there is the seasonality factor, and by that I mean these weeks leading up to the to year end, markets like to end on a high. They like to be positive, and they kind of they will do anything to keep that going. 2018 was the exception. There was a Fed meeting in December. There's another one in December, and they really, kicked the stool away from the market. And if you recall, there was a huge fall just before Christmas. It then actually, once the Christmas holidays were over, it kind of picked up again, and and off we went on the rally. But generally speaking, everyone's looking forward to what we call Santa's rally, and this is the feeling that you get. I will also draw your attention to the VIX. It's below 20. 20 is a kind of benchmark for the VIX. If it's wildly over 20 and climbing, and clearly something is not right. If it stays below 20 or even begins to fall, then it is still positive. And we will then look at what's going on in the Forex market. So that's investing. The other one to look at, as I said, is the cost speed. It's just overnight. It has a bit of a fall. This is the South Korean index. You say, well, what's that got to do with the Forex market? It's used for sentiment. It's global for some reason. Everyone sort of seems to refer to it and say, oh, what's the cost speed doing? Oh yeah, it's wildly volatile, but it does seem to reflect what is actually going on at the coal face, as it were, and we can see that that's had a tick up. The Russell, that broke out of that massive congestion phase that we've referred to in the past. Fell yesterday, but then so did everything else. But it's trying to creep higher. And then we have the Nasdaq, and the Nasdaq is up 47 as well. So as I said, we are inundated with news and data, and on a second by second basis. At the same time, we're looking at charts, but there's always going to be this lag. But first of all, you have to look at the underlying, and the underlying at the moment is the seasonality. We've had fantastic earnings. There's this will to keep this party going at least until the end of the year. But that doesn't mean to say that things are all lollipops and roses out there, because clearly they're not. As we've said, on a personal basis, we know how much things are going up. But as I've said before, the metrics that the central banks use for inflation may not necessarily be the ones that we use. So that's that. So going to look at the charts. As I said, this is now a cable, which is we've had this reaction lower on the news. It's really been about the dollar. So let me just go to my my CSI and matrix and heat map. I've got the heat map up today, and the reason I've got the heat map is because I've actually been David and I this week, what have we been doing in our own personal trading? We don't we're going to share a little bit about what we've done this week, and it's been really, really interesting the way we've traded. We've come out with a really nice lot of pips, but one of us went one way based on sentiment, and one of us went the other. Basically, David is. Are you still buying the dollar? You closed out. David has been buying the dollar on the assumption that sentiment was not so positive. I, on the other hand, was buying all the yen pairs. I bought all of them. I just had this position where I was short the yen, because this was pre the CPI and up to the CPI, but I closed out just before the CPI because I thought, you know what, if this comes in badly, then the market is going to have this knee-jerk reaction. But it was a classic example of two traders, both having different views on sentiment, both expressing their views in obviously different pairs, but both coming out with a positive result. And it's it's partly to do with the timing, in the sense, not the timing necessarily on the chart, but the understanding of how you interpret the fundamental releases and how they could impact the positions that you are in. It also reflects the notion that certain releases are going to be more important in the economic and the business cycle. We've talked about this before, but I'll just mention it again. We always use the example of the employment data, the NFP. Those of you who've been coming along to us for some time, or have the program, or have read what we put on the internet, will know that the NFP pre-pandemic, pre the virus, the Fed had fulfilled one of its mandates, which was to provide solid employment. So the market gets to a point where, yeah, the NFP is a high impact release, but you know what? It's kind of under control. Yeah, you'd get a little bit of volatility, but not very much. But as soon as the conditions change, that release becomes more impactful. The inflation is exactly the same. Up until very recently, the central banks were struggling to get to 2%. Now, there's quite an interesting story about why 2%, and I will, if I've got time, I'll explain to you, because it's a totally arbitrary figure, but it is based on some history, which is quite interesting on its own. And if you recall, as I said, pre all this, this focus on inflation, whenever the CPI came in, yeah, the market, it was nowhere near the 2%. So clearly, know, the market took the view, well, you know, it's not getting there, you would get some reaction, but not as much as you're getting now, because the numbers are coming in way over to what the expectation is. This understanding, this nuanced understanding of what's important at what time in this cycle. You could say, well, but I'm just on the 5-minute chart and I just want to know where to get in and where to get out. Well, BPA will help you with that, but it's understanding the impact of this type of data, you know, will have on the chart itself. It is moving, you know. It's not something you're going to get straight away. You've got to be a little bit patient. As I said, my books explain it. You know, introduce the subject, explain it, explain the what you need to know about the individual releases, and then the program goes into more detail. And really, how you get to deal with it is observation. So, for example, if you are in a position, the position I was in was I had bought, as I said, every single yen pair. They're all over the place, but they're still showing at the top of the heat map. But every single one of these cells, they were all up there together. All the cells were green. They were solid green. And I looked at it and I thought, you know what, I think the total came to about 360 pips across all the pairs. And I thought, you know what, I knew the CPI was coming. Inflation data is really important at the moment. You know what, let's just close out and see what happens. David was still holding his dollar positions, but he wasn't quite, you know, his positions weren't looking quite so healthy. CPI came out and I'd already bailed out, and his shot up, and then he came out of that those positions as well. So it's quite a subtle way of looking at the data, and also incorporating it into your decision making, particularly I think more for exits rather than entries, and using, as I said, using as I said, I was using the heat map because I had all these, and I didn't have space on with MT4. This is I need to download a couple more versions of MT4 on my platform. Those of you who know, on the quantumtrading.com site, with MT4 you don't have as much functionality with you know, moving charts around and profiles and what have you, but you can, there's something called what we call the bucket solution, so you can download multiple versions of your account, of your MT4 platform on your system, and it allows you, it optimizes your computer. It's a really clever, neat little way of making MT4 a little, you know, bringing some more functionality to MT4. Right, let me just take off the yen pair, see what's happening. Let's see what the dollar's doing. Well, clearly with the heat map, the thing about the heat map is obviously we have the ranking of all the pairs, and we can see across in multiple time frames what the individual pairs are doing in terms of movement. Clearly the dollar CAD's having a you know, it's moving up quite nicely. All the cells are green. There is a ranking element to this indicator as well. So, but you can use it in a number of different ways. I was using it purely to monitor these positions that I had without having to look at each individual chart. I could see they were all green. They were all moving in the right direction. Obviously, the account was confirming that. It was just a quick and easy way to do it. But you can also look at it in the sense that we look at extremes. Well, we can see the dollar yen, and we've got obviously the dollar is now still moving higher. And we've got these very oversold pairs down here. We've got euro dollar, cable, and we have the Aussie dollar over there. So let's just have a look at the dollar itself on the dollar index. And yes, it's still moving higher, as we can see here on the index. This is the index that comes with from my particular broker. Looking at the levels, well, we can see the dollar's kind of breaking away from the volume point of control, and it's also this week's S3 level, and we always talk about the S3 it's being an important level from a Camarilla perspective, and also the S4, but it's now coming into the R6, and that's although we've got 6 levels on this indicator. The R6 and the R4 is taken as well. Once it breaks above that, it's taken as a confirmed break. But often it will go through, but it can come down and retest. The other way to look at it, this is to say, okay, well, it's hit that level. You could see it as a potential for a correction. You just have to look at the individual chart to see how that whether that is a viable trade. Again, VPA will tell you, the candle patterns will tell you the levels that you see on the faster time frames, because the levels on this time frame are here for the week, but on the faster time frames they actually change. They're updated every day. That's just, why has this happened? Hold on, because I've been playing around with it. Nope. No, it's gone all squiffy. I'll have a look at one of the other ones. Looking at the CSI on the individual flows into the individual currencies, we can see here, well, there's been a tick up in the yen. Maybe sentiment is you know, is not quite as positive as we saw over at investing.com. The other thing I would say about the flows into the individual currencies is that many times they actually predict or preempt sentiment, the broader sentiment of the market. So, you know, the forex market will be showing yen buying, and yet the indices you know, will still be moving higher. But you will tend to find that the we have found that the forex, the flows into the individual risk on and risk off currencies can be a leading indicator. That's what I am trying to say. So clearly what we have to look at here is what's going is seeing still buying of the dollar. Cable is the weakest, not a huge number on so look, sorry, looking at the hour. There we are. Let's have a look. Dollar. Where's cable? Cable's actually come back. I do apologize. What I wanted to say was the numbers on the matrix for the hourly chart are not fantastic. Expect them to be much higher in this particular time frame at the London Open, but it is, as I said, although it's not a holiday over here, and after yesterday, markets do tend to quieten down. I would have expected these values to be much higher. So we could find that the price action on the individual charts is a little bit more subdued. It's moving, but it's not moving at pace, and it's not moving in a big range, as it were. Let's go down to the 15. That's what I wanted to see. Right, what's happening? We've got the pound still seems to be selling. Against what? Where are we? We've got the obviously cable. We've got the pound CAD. I was looking at the pound CAD earlier a little while ago, but it's the lines are, they've just crossed here, so that might be worth scoping out a little bit. Pound Swiss is always a good one to look at. The crosses on the CSI are always worth looking at. Although the trend has been underway, it can also provide a potential entry when they're moving in the same direction as the euro is here with the pound, because they're both being sold off. You may find that it is actually in congestion. Right, let me just pass over to David, and he can show you what he's been looking at, and I will actually try and repair on this side my index. Let's see, to move over to cable very quickly. Let's have a look whether we've got a continuation. Yes, it looks like we've got a continuation of the downward trend. And now the issue here is, well, where do you get in? What kind of little pullback do you wait for? Do you wait for a level? And looking at the 5-minute chart here, I can see a couple of little potential opportunities where it's, let's have a look. And completely Yeah, I will in a minute. You've got these little pullbacks here on here when at the open. It's how you approach your tactics to seeing this kind of move in a currency pair, because you can't be at your desk, 24/7. It's pretty much up to you. Do you like coming in on a pullback? Do you like to wait until it hits a particular level? There's no, one size does not fit all. Just quickly look at the index, because that's there we are. Sorry about that. I'm not going to move it. And we can see here, it's really whether it goes through that S6. If it carries on through there, lots of volume under yesterday, then we will get more of a breakout, which means we will get more weakness in the pairs that I have mentioned. Let me just pass over to David, see what he's been looking at.
Hi everyone, and a very warm welcome from me too. I hope you're all keeping well, staying safe as usual. No surprise, I'm on cable as well. I'm on the dollar. This is on multiple time frames, 15-second, 1 minute, 3 minute at the top, 5, 10, and over onto the daily at the bottom. And a very profitable day yesterday for us, because I think Anna took, as she said, 300 and something pips, and I took a similar sort of amount on the dollar move as well. And it was just interesting because when you look at the chart, it was use a football terminology, game of two halves, and it was exactly that. So we both did very nicely yesterday. Thank you very much. And where do we start? Okay, we've got a little bit of a reversal, but it's basically about you can see it here. This is on the CSI on 10 minute. This is the strength of selling on the pound. This is the strength of buying on the dollar. And if I pull this is over, I've got TradingView, I've got Ninja Trader, and I've also got TradeStation running at the bottom here as well. I'll pull that up again in a minute. This is on the indices. So top left, we've got the pound. No surprise to see what that's doing. What is surprising though, which did surprise me, I have to say, this morning, when we went through the London Open, very, very little volatility. Really just nothing at all, and it's just carried on, which is unusual. If I was trading it, I would have waited and then gone in thereafter once any assumed volatility had passed. But very, very little this morning, certainly in terms of cable at any rate. This is what the yen is doing. Yen's going sideways, although there is some decent buying on it. I'll show you on TradeStation because I've got a little matrix set up there. This is the dollar. So, no great surprise. Pound's falling strongly, dollar's rising strongly. Hey ho, that's certainly one of the pairs to be looking at. And this is over on the euro. Been some selling the euro, it hasn't really followed through for the time being. Just while I'm here, I haven't pulled this up for a while. This is the, for those of you who come along regularly, this was the little FXCM account that I've just been trading for the best part of the year. And we started off at around about $800 and something dollars. I think it was 820, some 822, something like that. And then I think the last time I pulled this up, we were around about the 1200, similar sort of amount, 1220, I think, 1230, something like that. So we've added another $200, in other words, 2,000 pips. And what I'm trying to do with this account is actually double it. So I'm looking to get this up to around about $1,600 by the end of the year. Very low risk trading, like all our trading is here. Tend to trade baskets on this one. And as I say, very low risk, very straightforward, very simple. I like to scale in. So in other words, when I've got a position in the market which is looking profitable, then I'll tend to add more positions to it, scaling into the market. And then I can always scale out as and when. So basically that's where we're at the moment. So we're at 1422. So as I say, I want to add another, if we can add another couple of hundred pips, and it's not about, the point of this account is, I suppose it's twofold. First of all, to show you that it is actually physically possible to make money with a very, very small capital base. Now, $800 is not life-changing. But nevertheless, to double an account of that size is significant because it shows you what is possible using relatively low risk trading approaches that but ones that suit you. As I say, I tend to trade baskets with this account. So I've got multiple positions running, but obviously all in the same direction, but they will be based around one particular currency. It might be based around the euro, might be based around the dollar, might be based around the yen, might be based around an Aussie, whatever. So, you know, that's typically the approach I'll look at. And as I say, I tend to scale in with it. But it does show you, it shows you what is possible to achieve. And once you've found that consistency, and really this is what it boils down to in essence, is once you have found the consistency to make money regularly over time, then truly the world is your oyster, because this is, you know, we've made what 600 or 700 pips, 7,000 pips here, 7,000 pips here. Well, you know, you multiply that up. If this is micro lots, okay, then we go to mini lots, we go to full lots, etc., etc. The world is truly your oyster, and really that is what it is all about, and nothing more. Just move that out of the way. And that's why we introduced the where are we? Here we are. That's why we introduced the funded forex program. In fact, we bolted this in about a year or so ago. And the reason we did that was to give our students who are on the education program, this is a hugely deep dive into the forex world. It teaches you everything you need to know about trading forex. It's a massive program. It covers all the psychology of trading, the fundamental analysis, relational, technical, the mechanics of trading, and then all the other modules down here. Massive deep dive into VPA, how to use the indicators, of course, because the indicators come with it, topic webinars, webinar libraries, a whole bunch of resources in here. The whole thing is huge. The videos, I think something like 250 to 300 hours of video and something like 450 lessons per se. And the reason we bolted in the funded forex program was to give our students, and we have a lot of them on the program, I can assure you, was to give our students the opportunity to really twofold. First of all, well, threefold. First of all, to trade a large live money account with no risk. In other words, you're trading our money. Secondly, to give you the opportunity to leverage that knowledge, our students the ability to leverage that knowledge and apply it, and to actually, thirdly, to really develop that consistency. Because when you start, what we offer down here are 3 levels of start. You can start with a 5,000, 10,000, 15, and the reason we call it an evaluation account is because it is exactly that. Yes, it is about us evaluating you as a trader, because if you know, we'd rather you didn't lose our money, and as you can appreciate, there are a whole load of risk and money management rules in there to make sure that everything is controlled, and it's all done automatically in the back end. But in addition to that, it's to allow you to evaluate yourself and to find that consistency. So once you've found consistency on the program, you can apply it to these evaluation levels. You decide where you start. You can start with a $5,000, a $10,000, or a $15,000 account. Your choice. There's a one-off fee down here. That's the entry ticket, if you like. Your cost of entry is that. You cannot lose any more than that. That's it. You are trading our money, not your money. It's our risk. You start at one of these levels, and once you trade purely on the 28 pairs, and then thereafter, once you achieve some very simple profit targets, we then multiply everything by 4. So if you start on 15,000, you go up to 60,000 of our money to trade, and thereafter it doubles. So it goes 60, 122, 44, 80, right the way through. Yes, there are risk and money management rules. The other nice thing about the program is you start earning on the evaluation stage. You get a lump sum kickback of 35% of the profit you make. And once you start to move to what we call the portfolio manager levels up here, you earn at the rate of 50% of the profit, and you can draw that off as and when you like. If you want to draw that monthly, that's fine with us. If you want to leave it in the pot, that's also fine. And you also get to trade other markets. You've got the indices up here and also gold as you move up through the levels. It's a comprehensive program. It goes right the way up to $2 million. So at some point, one of these students on the program who is moving through these as I speak at the moment, and we've got some portfolio managers in play, then ultimately, if they go through all the levels, they will end up at $2 million, which is significant. It goes without saying. This is where we are at the moment. Let's go back to K-Wall. Let me just show you TradeStation. Just hop onto TradeStation for a minute. One of the nice things, many nice things about TradeStation is you've got a radar panel up here, which allows you, obviously with trading Forex, primarily we're focusing on the 28 pairs here. In stocks, it's also extremely comprehensive, much more powerful because you're dealing with tens of thousands of assets to try and filter. So in forex, it's not so crucial, but it's a really nice feature to have. We're working on it with Market Analyzer as well. We've got it on. We've developed our own radar panel over on TradingView. But it just gives you the opportunity to flick through really quickly and just pick up what's going on. Obviously, we know what's going on in terms of cable. These are all linked, so we've got everything there, so we can flick through that pretty quickly. But then down the bottom here, I've also got a yen complex as well. So if we want to see what's going on in terms of yen, and as you can see here, I've got the trend monitor here, and I've got the trend dots here. I haven't got the trend dots on the chart at the moment, but certainly got the trend monitor here. So what it just gives you is a straight snapshot of, you know, whether the market is buying yen or selling yen, what is going on. And in addition to that, over here, I've got the volatility indicator also. So that is triggering in real time, telling us what's going on. So up here, you can see 2 bars ago, let's have a quick look at the Aussie CAD. 2 bars ago, we had a volatility trigger on 5 minute. Here we are down on 5 minute, just pop that up full size, you can see that a bit better. That was a volatility trigger. On that occasion, it passed straight through, fine, no problem at all. As I've said many times before, if that was in your favor and giving you some additional profit, close out. Well, you can always jump back in again here once it clears, no problem at all. It also gives you a very clear view into, I've got the accumulation distribution indicator on here, which is giving our levels. We've got the VPOC here. We've got a very strong level of what was support now. That is now acting as resistance. We've got another level up here. So in terms of moving away from that, that will certainly be one level to be looking at. We move through this low volume region. We're down into a higher volume region here. If this volume builds and exceeds this, then the volume point of control will drop down here and we'll be into another region of price agreement. In other words, the bulls and bears are in agreement. What else have we got going on up and down here? Let's go and have a look at euro dollar. There was 6 bars ago on 5. Let's just pop that up full size. It's just a really quick way of whizzing around the charts, all the various time frames. That was the volatility trigger into congestion. Still bearish at the moment. Trend monitor's red at the bottom of the screen there, as you can see. Let's drop that out the way. Let's come back over onto Ninja. That's the selling on the pound. Obviously, that's the rising of the dollar. Fantastic. But also, what it also tells you, if we go over onto multiple CSIs, let's go over here, let's drop that out the way, wait for those to load. Oops, sorry about that. There we go. You can see the strength of buying in the dollar. So this is on 1, 3, 5, and 10 minute. And what the CSI also tells you and guides you towards is those currency pairs which are not worth looking at. For example, we have the yen. We've got the dollar here is falling with the yen. Okay, so we know on a 1 minute time frame they're going to be moving in congestion. There isn't any divergence. What you're constantly looking for are these divergent lines. You're looking at strength in one, weakness than the other, and the cable just jumps off the page at you. You can't miss it. But when you look at other things as well, this is over on 10 minutes. So in terms of dollar yen, will we look at dollar yen? No, because the yen, the magenta line, is moving in the same direction as the dollar. So there wouldn't be a trade there. There would be a trade on Aussie dollar because the Aussie is falling nicely and the dollar is rising nicely, as there is on cable, as there is on New Zealand dollar. In fact, when I was on the array just a couple of minutes ago, let's just whiz over onto the array. Where are we? There we go. Up onto the array. I think the New Zealand dollar was actually weaker. Here we go. New Zealand dollar is actually weaker than cable. So this is what we're seeing on cable. Sorry, on the dollar. If we just isolate out on the dollar, you've got New Zealand dollar as the weakest. We've got pound, Aussie, euro, dollar yen, dollar Swiss, dollar CAD. So basically the entire market right now, for whatever reason, on the 5 minute time frame, is buying the dollar. Simple as that. And that's what we're looking for. We are always looking at, when we're trading, whatever pair it is, you want to be trading with universal sentiment for that particular currency. There are occasions when you can trade against the universal flow, in other words, the river. So you can be paddling upstream when the bulk of the market is moving downstream, absolutely fine, as long as you're aware of that fact. It happens, it occurs for lots of different reasons. It may well be due to a local interest rate decision, a piece of fundamental news, a piece of political news, somebody has said something in a central bank, etc., etc., etc. There are lots of reasons that a particular currency pair does not follow the universal flow of sentiment, but generally speaking, this is what you're looking for, because it gives you the comfort factor that whatever you're doing down here is pretty much broadly respected across the market, and it is. Just isolate out that one as well. And what we're looking for constantly is a full house. So we want to see the dollar yen here move up and join its brothers and sisters up here, and the euro dollar drop down here as well. It's not obviously fundamentally important to the decision-making process, but essentially that is what we're looking for. In whatever time frames we're trading, we're looking for this to march up, euro dollar to fall, dollar yen to rise, bearing in mind that the dollar yen does not necessarily behave in the same way as you might expect it to. In other words, buying dollar yen rises, buying yen, dollar yen falls. It's not that linear, and we explain why in the program. The dollar yen is a very, very unusual currency pair. It does not follow the pattern that you would expect, and we spend a long time explaining that, because a lot of traders get burnt trading dollar yen because they think it follows the same universal pattern of buying or selling of the counter currencies, and it doesn't. I won't go into it now, but it's all explained in the program in great detail. So that's where we are at the moment. And then, of course, you might be looking at the dollar, and then you might say, well, what's happening on the pound? Is the same picture reflected across the pound? So let's just isolate out the pound, because you want to see what that's doing. And the short answer is, well, not really, because ideally, if the universal flow was consistent, then what you would want to be seeing is if everybody was selling the pound, then the pound Aussie should be down the bottom here, because this is all the pounds as the primary currency. The pound New Zealand should be down here as well, but it isn't. It's up here. So if you're thinking, oh, well, the market per se is selling the pound, well, actually, it isn't on the faster time frames. It is against the dollar, and it is broadly speaking against the yen. But once you get up into these cross-currency pairs, it's a very different picture. So you just have to be aware of these facts all the time. Euro pound obviously is going in the opposite direction, because the pound is the counter currency. So you start to look at it in that sense, and you think, okay, fine, which pound pair am I going to buy, which is going to give me the best opportunity for a trade? But it's all to do with the sentiment. And given that, let's just click that off there, we saw earlier on that the New Zealand dollar was the weakest. So if we isolate out in terms of New Zealand now, where is pound New Zealand? Well, it's up here somewhere. So part of the reason that the pound New Zealand is up here and not heavily selling of the pound is because the New Zealand selling is actually driving that more strongly. So, what? Oh, can you hear me? Can you hear me okay? Yeah, fine. Okay, occasionally I do rabbit on with the microphone switched off. It has been done many, many times before, but hopefully not on this occasion. So Anna can hear me, so I'm assuming everyone else can. So I just switched that off there. Let's go back onto the charts. Where are we? I don't see pairs multiplied. Let's go. I'm just going to have a look and see what's going on in terms of sentiment. There we go. This is on the 3 US indices, YM, NQ, and ES on the daily at the bottom. We had a down day yesterday. It looks as though the markets are desperately trying to hang on and perhaps recover a little bit. Let's just maximize it up a bit. This is on electronic, so we're trading Globex only here. And as I said yesterday, or last night rather, our time in the stock webinar, people who tell you can't trade Globex indices purely electronic when the electronic market is running in isolation away from the cash markets, I'm afraid I don't agree at all. In fact, as I showed you last night, the pricing at the moment is moving sideways. There's no great opportunities, but the volume is perfectly demonstrable. The price action is smoother. You get less volatility. As soon as the cash markets open alongside Globex, you get huge volatility. Obviously, the market moves a lot faster. That is absolutely true, but it's perfectly tradable in Globex alone. Anyway, that's what's going on in terms of sentiment. So it's pretty flat, moving sideways, tiny little movements here on the 3 indices. Let's go back onto the currency pairs multiples. Let's just have a quick look at the currency strength multiples. Let's have a see what's going on in futures. Here we go. Up onto the currency futures. This is currency futures. I've got the 6A here, which is the Aussie dollar. This is the 6B, which is cable, pound dollar in other words. This is, just refresh that, there we go. This is CAD dollar. This is not dollar CAD, it's CAD dollar, because in the futures world, everything is reversed. Everything is against the dollar, so the dollar is always the counter currency, which is why, let's pop that up, which is why we have these strange numbers in terms of, because this is the inverse of the dollar CAD, so it's CAD dollar, so these numbers are the inverse of what you might see in terms of spot rates, but everything else works exactly the same. Obviously, the nomenclature is different. This is 6E, which is euro dollar, and the volume works in exactly the same way here as well. This is dollar yen. That's what we're seeing at the moment. And once you move through the beauty of the volume point of control, and Anna mentioned patience, being patient, we always have to be patient and wait for these opportunities to arrive. One of the tactical approaches that you can employ is to trade breakouts, breakaways. The only requirement is that you have to be patient, which, let's face it, none of us are very good at, because we're here to trade, we're here to make money, and if the markets are moving, we want to be in there. But congestion phases, as we explained in the program, are where trends are born. The analogy we use is of the head of a river, a big salmon river, where the salmon return to spawn, and they then breed there, and then they move out to sea and become big fish. As similar sort of principles, but one of the beauties of trading around the VPOC or waiting for breakaways from the VPOC is you do get these strong levels. And these levels are constantly changing all the time, as you saw there with the accumulation distribution. What it's doing is it's constantly checking and recalculating for how many times these levels have been tested and retested. And the thicker the line, then the greater is the strength of that region. This one's been tested 7 times. You may not be able to see it, that blue line there. So you've got a very strong area of resistance, both price resistance, but in addition to that, you've also got volume resistance, as denoted by the volume point of control, because volume acts in the same way as does price in that context of strength, of support and resistance. If the price is trying to battle through these large areas of volume, it's going to take a lot of effort down here for that to happen. It's got to force its way through, and you've also got price-based resistance aligned in there as well. So when you're trading breakaways, you have this opportunity, this comfort factor, if you will, of knowing that you've got these very strong regions which will protect you when you've got any sort of pullback coming into play. Just pull this one up. You can see we've got a decent amount of buying. This is cable on 6B. You can see the amount of volume that's coming there. Big load of volume come in. Nice deep wick to the lower body of the candle. So we know for a fact that big operators are moving in there in size. They're starting to buy this particular currency, but we are down at the volume point of control. So what we're looking for is a congestion phase. If this market is going to recover, then obviously we want to see it moving higher with rising volume here. But at the moment, we're still in bearish territory. But because we're at the volume point of control on 5, that's what we're looking for at the moment. We're looking for some congestion to build, but we've definitely got some buying coming in here, as denoted with that candle and the ton of volume that's coming underneath as well. Let's just let me just pull the trading view back over again, just to update on where we are in terms of the indices. This is where we are in terms of pounds. That's certainly some buying came in there. Still on the downwards path though. This is on the yen, really not going anywhere with any great direction. Dollar starting to pause a little bit of a pause point here. We've got a wick to the upper body here. So a little bit of a pause on the dollar. We've now got some very strong buying in terms of euro coming to the market since London opened at 8 o'clock. So just going to have a quick look at that. Let's have a look. Let's go over onto TradeStation probably again. Let's have a look at the euro. This is the euro buying we're seeing now. And if you're looking for a pair, would you be looking at euro Swiss? No, because if I click on euro Swiss, it'll be going sideways because the euro and the Swiss franc are rising together. So in terms of, we're on, what are we on here? 4 minutes. So let's go to the 3 minute. Pop that up full size. That's what you're seeing. Very choppy, no real direction. And that's the reason why, because the market now is buying Swiss franc and it's buying euro. But if you looked at something like Euro Aussie, that will have a trend on it. There we go. Why? because we've got the euro rising strongly, we've got the Aussie falling strongly. If you want to pick up a trend that's already in play and hasn't actually reached a potential pause point, let's go and have a look at euro yen, for example, euro CAD, for example. The CAD's starting to kick down nicely. Let's have a quick look at euro CAD. That will also be developing a trend. There we go. Trend monitor here. Here we are on 1 minute. Trend monitor's transition to blue, transitioning through on 3, transitioning through on 5. This is over onto 10-minute, pretty slow stuff down here. So certainly from an intraday perspective, let's just pop that up. There we go. Really nice move there, solid move up through all these levels on the accumulation distribution indicator through that that strong one there. You can see a little 5 there, so that was pretty strong. These are pretty weak, very minor levels, so not of any great significance. They only become significant when they start to cluster together. And that's obviously when 2 or 3 or 4 cluster together, then you've got additional strength within that particular region. What else we look at here? Now, potentially, we've got the dollar at the top. Those of you who come along regularly, I like to trade reversals. So we've got dollar at the top here, we've got pound at the bottom. So potentially you might now be looking at a reversal. You might take a reversal opportunity. Let's have a quick look. Okay, you've got a tiny little hammer here. This is on 1. We've definitely got a bit of buying coming there. Is that enough to reverse this heavy weight of fundamental data that's bearing down on the market? Quite possibly. Oops, sorry. Gosh, that's gone very strange. Sorry about that. I'll just drag that down. It all got out of kilter. Sorry. Where is it? There. There it is. Okay, let's pull that down. There we go. So we've got some buying coming in here. Nice big wick to the lower body. Good volume under there, but not huge. So, it's a question of being cautious. It's looking at how this responds to this volume here. And if you see this rising and the volume here falling, then it's not going to go very far, because what you want to see is rising market, rising volume, not a rising market and falling volume. But it's early doors on this particular reversal. In terms of where this reversal might take us, actually quite good news if you're a scalping trader, because there's very little. In fact, we've only got one level here in terms of price-based resistance ahead, and it's minor, so that's good news. We've also got a nice low volume node here on the VPOC, so that's good news as well. Builds a little bit heavier up here, but essentially we don't really get back to full volume until we get back to the VPOC. Look at the strength of that resistance there. We've got the VPOC itself, we've got a massive, big, fat resistance area in there with the dashed blue line. So in terms of taking a trade on this one, how far is it going to run? It's not going to get much further than 34.05 maybe. So there's 20 pips in here. Now that may be enough for you, but at least it gives you an idea of where this is like to run at. First of all, it gives you an idea of target. Secondly, the chart gives you an idea of the ease with which it's like to go through there. And thirdly, where that is going to run out of steam. So is 20 pips enough for you? Maybe, may not be, depends what you're doing. And that's really the way to look at it. It's forget about this I was going to use a rude word there. Forget about this nonsense of risk and reward. I've got to have 3 to 1 or 4 to 1 or 2 to 1, all that nonsense. Market doesn't give a tinker's what's it about what you want or need or require. It's about what the chart will actually deliver from a technical perspective, and you look at it in that sense. Really nice little example there. But really, what this shows is the tools, if you like, and the way to set up your charts that you can actually navigate pretty quickly at speed in terms of chart linking, in terms of time frames, in terms of having a panel that you can whiz up and down for it pretty quickly, in terms of setting up things like this, for example. This is a yen matrix. And just really moving around rapidly at speed so you can pick up the opportunities. Just click that out of the way. I've actually got a similar sort of thing here, much more simple example, but in terms of currency majors matrix, you can set this up on any chart, any platform you like. So this is basically the majors. Oh, I've got the monthly there. Oh, all the monthly, apologies, I'm doing something else here. But essentially what you're looking at what is going on in terms of the dollar. So I've got cable, dollar CAD, Aussie dollar, euro dollar, dollar Swiss, New Zealand dollar. It just gives you an instant snapshot of what is happening in terms of the dollar So this is on the monthly, but it could be on any time frame you choose. Do you want me to pass back to you, darling? Okay. Yeah, I did. Yeah. Let's just pop that back on too. There we go. Move that out of the way. And this is the little rally that, you know, we're just starting to see potentially this little kick over in dollar, little, you know, pause point in cable. Is that going to reverse all the way up, all the way down? I can't tell you. All you can do is look at the chart and make your decisions accordingly. And if you like trading reversals, fine. But bear in mind, you will have to put more risk on the table because your stop loss will have to be that much wider. This is not a trend that's in play. This is a reversal opportunity that you're taking as a trade. You're not sure of the outcome. And in addition to that, when currencies get overbought and oversold, you will have to allow for the buffering effect because this could stay down here for some time. This could stay up here for some time. But ultimately, at some point, the market will reverse because this is a market of pure market reversal. It is the purest market you will find of mean reversion. There is no other. You are constantly being offered opportunities to trade long and short as currencies reverse from overbought to oversold and back again, because a currency doesn't go to zero. It's not like a stock where a stock can go to zero, go to very, very low levels and continue to low levels. This is a market of mean reversion, and that's why it's the purest market there is for trading a tactical approach like reversals. Okay. Yep. I'll just pass back to Anna.
That move that David was looking at in cable is also obviously being mirrored in euro dollar, and possibly with slightly more momentum to it, and it's curious that it's almost identical. We don't have a hammer, but if you overlay, you've got a bullish engulfing candle on the 5-minute chart, and you can see here it's actually moving. The strength of the move is a stronger move than you see in that you've got in a cable. If we look at the let's have a look. If we look at the index, 1 second, what I said earlier on, this is the daily, the levels on the daily. I said that the R6 was you know, it's probably not as important as the 3 and the 4, but it's still an important level, and it would either going to possibly pause there, and that pause is reflected in the sort of little reversals that we are seeing at the moment. The other reason why the move in euro dollar is probably a little bit stronger than cable, if we look on the hourly matrix, you can see the euro dollar is ahead of the ranking of the dollar pairs. We can see it's actually a dollar CAD, dollar Swiss. This is where cable is. This is where euro dollar is. Also, the euro dollar tends to the euro is actually the biggest component of the index, so you would expect it to be certainly ahead of cable, and it may now start to move much you know, more strongly against all the as opposed to the other majors, as it were. And also, you know, where is it on the CSI? There's also been some news coming out of not releases but comments on the euro, so you know, you've always got to be aware of what's going on a minute by minute basis. As I said, Financial Juice is the one I use. You know, there's lots of, partly because the paid service is certainly not as expensive as some of the other services that are out there at the moment. And if we look at the 15-minute CSI, we can actually see the downturn already in the dollar. You can see the euro moving strongly. You can see the Swiss franc moving strongly, but you know, the pound is kind of, it hasn't quite caught that you know, the hasn't quite turned up. Neither has the New Zealand. So, for example, what you could look at it, you could say, well, actually, you know, maybe if you've missed one, you can go and have a look at one of the other majors and possibly take a reversal trade there. Now, once the reversal is countered, we're talking about reversal. Sometimes it's a true reversal from primary, you know, it's going from primary to primary, or it's simply a counter trend trade, which is a viable counter trend trade. And as David said, looking at the cable, your levels on your chart will tell you you know, how viable that potential trade is. And you can see here immediately it's moving, you know, it's a little bit more desultory. We've got smaller candles. We've also got the Renko chart, which will help us with the because the Renko will pick up momentum. This is set at 2.5 pips. So every time 2.5 pips goes through the market, then one of these little bricks will post. We've got the trend dot transition. The trend monitor hasn't quite transitioned, and again, it really depends on you. This is very much counter to, if you like, the overall bias, the overall trend in cable, which is, you know, down at the moment. It's been selling off quite heavily. So, you know, you do have to weigh that up against what you see in the faster chart. So your other approach could be, say, well, no, I'm not interested in counter trend trading. Okay, there may be 20 pips on there, but it's going to be it's a much more high risk trade, because counter trend trading, if it's not a reversal, it's simply a counter trend, and you know, maybe some, even though it may be viable, you say no. You would then be looking, saying, okay, I actually want to join the prevailing dominant trend, and the prevailing dominant trend, certainly from yesterday on cable, is that it's down. So you look at the levels, you look at the points where it is likely to pause. Clearly, we have the volume point of control, which is hugely important on certainly on the 5-minute chart, and you can say, well, when it gets there, maybe I will take that as a potential opportunity to sell again. So as I said, there are all sorts of decisions that you have to make based on what the price action is actually doing on the chart. As I said, there is no right or wrong way. There is only the way that suits you. Finding what suits you, finding whether you like reversals, finding whether you like breakaways. It's trial and error. It depends on your temperament, as David said. Reversals, you have to be patient, and you have to allow for wider stops. Reversals, what is their percentage of success as against breakaway trades? I've not actually done the mathematics. I can only give you an observational opinion. Breakaways, certainly and you only have to look at a chart where you've got the volume point of control. You can see that breakaways, there are fakes. It's if you've the volume, if you have VPA, you can certainly cut down on the amount of fake outs, because if the price breaks out and there is no accompanying volume. Now we have a little example here. We had this break here, where are we? Here we are. Here we here. We had here that one, and then a little pullback, and then it carried on higher. It's you have to use the volume to see whether it is supported, but they do fail. Nothing is foolproof. The advantage of using a breakaway, using, say, the volume point of control, or one of the really important levels like the S3. The S3 is or a Fibonacci level, whatever it is that you like to use, is where you place your stops. That they are much tighter. So you could end up with, yes, trades that have failed, but your stop, because your stop losses you can afford to be much tighter with your stop losses, then it's fine. You can keep the losses keep them under control. And then when it does move away, because things don't stay in congestion forever, you know, when you do get a trend, great, you can then go into the trend, and once you're in a trend, you can then look at the trend and possibly, you know, look at these pullbacks, corrections to re-enter. Then you get to a reversal, and a reversal here, this is a bearish engulfing. This is where your candle patterns come in. A lot of people like reversals because the candle patterns are they're much more sort of straightforward. So this is a bearish engulfing. You've got a hammer candle there. They're kind of easier to spot on the chart. But as I said, this is a, you know, this is a hammer. Where would you put, you know, your stop loss? You've got to put it somewhere. You know, you'd have to look at the other time frames down here. When you compare it with what's going on the volume point of control, you can see if you at this point here, you would put it, where was the last, you know, at the point where it was it bounced off. Well, you've got the volume support here, very, very close. That's very tight. Or do you look a bit further on and you think, well, it bounced off this level here. It's you've got, in a way, you've got more choice, and then you've got the decision of whether do you want to be a little bit more aggressive, or do you want to, you know, give it a little bit of leeway. But you have to accept the fact with breakaway trading is that you know, as they say, you will get a certain number of fake outs. But then the other aspect of charts is markets spend an awful long time in congestion. So, you know, getting to understand congestion, and if, you know, you may be, I'm not saying you'll be forced to trade a congestion phase, but understanding that they are, that they appear more often on a chart for all sorts of reasons, time, you know, after a volatile move, then patience is required. Now, if that still doesn't, you know, that really doesn't appeal to you, and you want to look at reversals, then you have to sort of study more the kind of chart patterns to expect. Certainly look at the key levels where you can get a reversal following a trend lower. So this is what's happening on cable. It still hasn't transitioned in terms of an entry using the Renko and the time chart. I use the Renko with the 5-minute chart. As I said, a more conservative entry would be to use the when the trend monitor and the trend dot are both blue. They're both a deep blue. This is only transition. Using just one candle, and we talked about the signals of one candle primarily yesterday. If you want to catch up on the recording from yesterday, we looked at Tesla. There's also some detailed posts about Tesla on my site annacooling.com, and the story between that of the background to the Tesla analysis that is on my site at the moment actually refers to a post that we did on the 21st of October, where we highlighted the possibility that Tesla was looking weak. The result of that post, and actually the result was abuse from the you know, fanatical supporters of Tesla. I don't have a problem with Tesla. I really don't. I think what Musk has done has been absolutely extraordinary. But on the, you know, there was this signal of weakness. It was only one signal. I accept that, but the volume also on the monthly chart didn't look fantastic. And the issue with a single candle is, you know, basing a decision on a single candle is that sometimes it will do what it's supposed to do, i.e. reverse, and it tends to do that on the faster time frames. We are talking slower time frames here, and we've actually had what actually happened was the initial weakness, we spotted it. It did carry on. You can read the analysis here. We had a couple of spinning tops, and the rest is history. And what I also said about David, I also said is markets need corrections, even in even in things like Bitcoin and things like Tesla, even in stocks that that people are passionate about. It's wonderful to be passionate about things, but you have to look at the reality of what is on the chart. Now, to get back to this chart, we've got the 5-minute. So this is actually proving to be a potential reversal, not particularly fast. That is a much more aggressive entry. On the faster time frames, these single signals, these individual signals of 2-bar reversals, engulfing candles, hammer candles, shooting stars, they will tend to develop much more quickly than on a slower time frame chart. Now, it still hasn't transitioned on the Renko, so if you wanted to be a little bit more conservative, you would wait, but you would have to be cognizant of the fact that where is this going to? As David has shown on the TradeStation one, it is going to go slap bang into the volume point of control from where it has it went up higher earlier, but it also tried to break lower. So it may not be the best one to take based on the fact that the dollar is now selling off. So if we go to the euro, back to euro dollar here, and we look at the same setup as we have, well, what's happened with euro dollar? And funny enough, the euro dollar has its own volume point of control, more or less in the same place that cable has. And what has happened, it's gone straight into it, and it looks like it's coming off here. So is this the fate that awaits cable? Possibly. Now, you could take the view that, well, actually, this is all, it's awfully interesting, but I'm still very bullish on the dollar. So therefore, I'm going to use that as possibly as an opportunity. Yeah, it's actually going to go, it's actually going to continue the primary trend lower. This has been, as I said, this is a primary, the primary trend being to the downside. So lots of decisions to make. The key thing to take away is finding, and it is trial and error, is what type of tactics do you like? Do you feel more comfortable with? Do you feel more comfortable with reversals? Do you feel comfortable with breaking away from key points on a chart, be it the VPOC, be it these these levels given to us by the Camarilla, or do you use Fibonacci? There is another way, there's a third way, if you like, and that is you look at the chart and you let the chart dictate to you what to use. So you can see clearly that it is in a congestion phase, and you apply a tactic appropriate to a breakaway, but you accept the fact that by keeping your stops very, very tight, you wouldn't use the same money management that you would use, say, for reversal trading. Accept the fact that you are going to get, it's not always going to, the first time you go in, you're not going to get the breakaway. The Renko will help. Something using the Renko will help because it does smooth out the choppiness. But you can see here, it will pick up the little bits of congestion. As long as the trend monitor stays red, then you're still going to be in with a chance that it will hold that trend. Then as you can see here, it did actually go back. That actually changed. So but I suspect it hit a level. Maybe a volume level or a price level on the time chart. So it looks like it's had another little, this attempt to reverse higher, and it looks like it's not going to go very far. Well, we know where it was going to go. It was going to go to the VPOC, and it's actually stopped dead on euro dollar. And I suspect, I wonder if cable has actually got there. Yeah, but as David said, if you are an out-and-out scalper, where you are only interested in really a very small number of points or pips. And as we said, if you're micro lots, 10 pips, or it's not going to sound very, it's not going to sound very much, but once you get comfortable with micro lots, then it's a case of scaling up. A few pips at a full lot size is worth having. And I have to say, I have my account is micro lots as well, but I have in error forgotten to change the contract size and kept it as a full lot. And I looked at my position, oh my goodness, that's gone up a lot. And I suddenly thought, oh heavens, it's only gone up a few pips, and it was up like $200. And I thought, yeah, the temptation is to go into full lots, but trust me, you don't want to do that. You want to stick to micro lots when you first start, as they will give you the confidence then to scale up in position sizes. And also sometimes certainly with breakouts, I would say always start with small amounts just to test it and see what's going to happen, because you can always add to it. Once the trend gets underway, you can always add to your position as well. And in fact, it looks like cable's not actually going to get to the VPOC. It hasn't even made it. We've got two little candles here, got a lot of volume underneath them, very, very anomalous, a weakness there. So as I said, if you've gone in aggressively on the hammer candle, you haven't, what have you got, 10 pips, David, at that? And the Renko hasn't even, that hasn't gone to a bright blue, and it looks like it's and it's actually coming off the S1 there as well. So that's it. That's all I've got to say. So as I said, reversals, breakouts, try them for yourself, see what suits you, or you can take the view, you look at the chart and you say, right, this is in a congestion phase, this is the most appropriate approach, tactic to use. Have you got anything else to say? Was that it, Dave? Can I pass over to you? Right. Oh, well, I'm going to say goodbye today. It was lovely to have you here. I hope you've enjoyed what we've covered. What as I said here very quickly, I said you can catch up the analysis on my site, annacooling.com. On the main blog, you will find it is generally stocks, commodities, and stocks and commodities actually is basically, but all the VPA lessons are there, because what you see on, as I said, this is a stock, but it could easily be, well, anything really. Most of my forex is on this Facebook page, which is Learn Forex Trading. I have started a Twitter feed, but I haven't really got going with it yet, a separate one just for Forex, or you can follow me on Twitter. I think David has done this is the education program, Quantum Trading Education.com, and this is obviously where you can find all the indicators. Right, thank you so much for coming along. I just to see if you've got any questions. There is no picture appealing. Oh, no picture. Did you see it, David? Yeah. I'm sorry, George. I don't know quite what happened there. I hope things did resolve themselves. You seem to be the only one that was having an issue with GoToWebinar. We had no sound, and then I do apologise. Sometimes I think the stress for us is not looking at the charts and analysing the charts in real time. It's more dealing with the technology that we have to use to deliver these webinars. So if you've had any issues, I do apologise. Right, enjoy the rest of the trading day. As I said, it is a holiday in certainly in North America. The bond market is closed, but obviously Forex is open, as well as the stock market. But liquidity could be slightly reduced. We will be back next week. Enjoy the rest of the trading week. Stay safe out there, and we will catch you next time.